So yes, now let us start with the second chapter, residential status 1. Before we start with this chapter, I wanted to ask you two questions. Question 1. Currently, India is going to England tour for playing tests in England. Let's say Shubman Gill is there. He went to England. He played in England. He earned Man of the Match award in England. My question is, whatever the income received in England for getting Man of the Match award, will it be taxable in India or not? Will it be taxable or not? So some of you are saying taxable, some of you are saying not taxable. Okay, I will ask you another question. For Ambani wedding, Justin Bieber came to India. He performed in the Sangeet. For performing in the Sangeet, let's say 10 crores is paid by Ambani to Justin Bieber. Whether that 10 crores received by Justin Bieber, this 10 crores not received in India. Justin Bieber went back to his own country. In his own country, he received 10 crore rupees. Now, for performing in India, he received consideration of 10 crores in his own country. Whether that amount is taxable for Justin Bieber or not. So some of you are saying taxable, some of you are saying not taxable. The answer for these two questions you will come to know once we finish this residential status 1 chapter. Okay. So slowly let us start residential status 1. First I am going to start with basics. There are two types of incomes. How many? Two types of incomes. Indian income, foreign income. What do you mean by Indian income? Indian income means income either received in India or accrued in India. Income either received in India or accrued in India, we call that income as Indian income. That means what is the conjunction? Conjunction is or. That means what? Any one of them. There are two aspects, place of accrual, place of receipt. Out of these two aspects, if any one of them is in India, sufficient. We call such income as Indian income. Are you able to understand? So either place of accrual or place of receipt, if any one of them is in India, we call such income as Indian income. Next, foreign income. What do you mean by foreign income? Income that is received and accrued outside India. We call such income as foreign income. What is the conjunction? Conjunction is and. That means out of two aspects, place of accrual, place of receipt. Out of these two aspects, if both are outside India, we call such income as foreign income. Are you able to understand? So, based on two aspects, we are going to tell whether income is Indian income or foreign income. What are the two aspects? Place of accrual, place of receipt. So, out of place of accrual, place of receipt, if any one of them is in India, that means conjunction is or. If any one of them is in India, we call such income as Indian income. Out of place of accrual, place of receipt, if both are outside India, we call such income as foreign income. Are you able to understand? Place of accrual, place of receipt, if both are outside India, we call such income as foreign income. Are you able to understand? Now, with this you understood what Indian income means and what foreign income means. Before we proceed further, let me give you extra clarity. What do you mean by receipt? For example, I am working in Dubai. I got 10,000 dirhams. I transferred 8,000 dirhams to my mother in India. In this case, I am working in Dubai. I got 10,000 dirhams salary. Now, this 10,000 dirhams salary is considered as income. When out of this 10,000 dirhams, I transferred 8,000 dirhams to my mother. Once after you received the income for the first time, subsequently, if you transfer money from one person to another person or from one bank account to another bank account, it will be merely termed as transmission or remittance. In my mother hands, again it will not be considered as income. Are you able to understand? That means what? Whatever the amount that I have received for the first time, only that will be termed as income. I will tell another example. I have bank account in Dubai. I also have bank account in India. I got 10,000 dirhams in Dubai. Whatever the amount that I received in Dubai is there, that amount I transferred from Dubai bank account to Indian bank account. Whether transfer of amount from Dubai bank account to Indian bank account, will it also be termed as income? No, it will not be termed as income received. For the first time when you receive income, only that will be considered as income received. Subsequently, if you transfer money to another person or from one account to another account, it will not be treated as income. Are you able to understand? So you can see here, meaning of income received. Income is to be included in total income of the SSC immediately on its actual or deemed receipt. The receipt of income refers to only the first occasion when the recipient gets the money under his control. So for the first time when recipient is getting money under his control, that transaction will only be considered as place of receipt of income. Once after he receives the money, once after he takes control of the money, subsequently if he transfers money to another person or to another account of his, that will not be treated as receipt of income. It is merely transmission of money or remittance of money. You can see, therefore when once an amount is received as income, remittance or transmission of that amount from one place or person to another does not constitute receipt of income in the hands of subsequent recipient or at the place of subsequent recipient. Are you able to understand? So for the first time when individual is getting control over such money upon receipt, that instance, that transaction will only be considered as receipt of income. Once after he receives income for the first time, subsequently he transfers money to another person or to another account, it merely amounts to remittance or transmission. Secondary transfer is not to be treated as again receipt of income. Are you able to understand? Next, do you know the difference between accrue and due? Accrue and due. Can someone tell the difference? Okay, listen. There is A and B. A works with B as per the agreement. Salary will be paid on 5th of next month. Salary will be paid on 5th of next month. That means what? April month salary will be paid to employee on 5th of May, on or before 5th of May. Am I correct or not? Yes. Employee worked from April 1 to April 16. When he worked from April 1 to April 16, for 16 days he worked without any holiday, without any leave, without any break. Every day he attended the office. That means 16 days salary got accrued to him. Salary got accrued to him. On 17th April, can he go and ask employer to pay salary for 16 days? He cannot go and ask employer, because as per the agreement, he can ask salary on 5th of next month. Am I correct or not? That means every day, whatever the work that is done, for that much of work, salary is getting accrued. But salary will become due only on 5th of next month. Are you able to understand? So very simple difference. Every day, whatever the work that is done, for that salary is going to get accrued, but salary becomes due only on the due date 5th of next month. Are you able to understand? So what do you mean by due? On 5th of next month, employee will get a right to ask the payment of salary from employer. Am I correct or not? So accrue means what? Work done. Right to receive the income. Tell me, in this case, did he work from April 1 to April 16? Yes, he worked from April 1 to April 16. That means for 16 days, he has the right to receive salary from employer. So accrue means what? Right to receive the income. Due means what? Right to enforce the payment. Can he enforce payment on 17th April? No. He can enforce payment only on 5th May. So due date means, due basis means the day on which he got the right to enforce payment. Accrue means right to receive the income. That is the difference between accrue and due. Accrue means right to receive the income. Right to receive does not mean he can ask for payment. He can ask for payment only on due date. On due date only he can enforce his right for payment. Are you able to understand? That is the difference between accrue and due. You can see accrue refers to right to receive the income, whereas due refers to right to enforce payment of the same. In other words, when the right to receive income becomes vested in the SSE, it is said to accrue or arise. Are you able to understand? I gave this example, you can better understand. Salary for work done in December will accrue throughout the month, day to day, but will become due on the salary bill being passed on 31st December or January. Are you able to understand? So this is the difference between accrue and due. Let's revise quickly whatever we have discussed. There are two aspects. How many aspects? Place of accrual, place of receipt. Out of these two, what is the conjunction? Or. Out of these two, if any one of them is in India, we call such income as Indian income. Place of accrual, place of receipt. If both are outside India, we call such income as foreign income. Are you able to understand? Now, what do you mean by income received? In the first occasion, when SSC gets control over the money, control over the income, only that first transaction is to be considered as receipt of income. Once income is received, subsequently if that money is transferred from one account to another account or from one person to another person, it merely amounts to transfer or remittance. Again, it does not amount to receipt of income. Then we discussed about accrue and due. Accrue means right to receive the income. Due means right to enforce the payment. That is the difference. Tell me one small thing. If place of accrual is in India, do we need to think about place of receipt? We need not think about place of receipt, because once place of accrual is in India, conjunction is or. Once place of accrual is in India, irrespective of place of receipt, income is to be treated as Indian income. Once place of accrual is in India, whether place of receipt is in India or outside India, it will be treated as Indian income only. Are you able to understand? So that means what? Out of two aspects, if one aspect is in India, irrespective of the second aspect, it will be treated as Indian income. Vice versa. Place of receipt is in India. Do you need to check place of accrual? You are not required to check place of accrual. Once place of receipt is in India, whether place of accrual is in India or outside India, it will be treated as Indian income. Are you able to understand? That means source of income, accrual of income, India, irrespective of place of receipt, it is Indian income. Receipt in India, once place of receipt is in India, irrespective of place of accrual, it will be treated as Indian income. But to call an income as foreign income, both of them should be outside India. Place of accrual, place of receipt, both should be outside India. Then only we call such income as foreign income. Correct? Shall I explain further? What is the name of this chapter? Residential status. So in total there are 3 residential statuses. How many? 3 residential statuses. First one is ROR, second one is RNOR, third one is NR, non-resident. So how many statuses are there? 3 residential statuses. Either resident and ordinarily resident, resident but not ordinarily resident, non-resident. In case of resident and ordinarily resident, global income is taxable. Global income is taxable. That means both Indian income and foreign income is taxable. Both Indian income and foreign income is taxable. So if a person becomes resident and ordinarily resident in India, for him all incomes are taxable. Global incomes are taxable. Whether it is Indian income or foreign income, every income is taxable for resident and ordinarily resident. In case of resident but not ordinarily resident, Indian income is taxable. Along with Indian income, foreign income from business controlled or profession set up in India is taxable. Profession set up in India is taxable. Sir, what do you mean by business controlled from India or profession set up in India? I will explain little later. But please remember, in case of RNOR, resident but not ordinarily resident, all Indians are taxable. All Indian incomes are taxable. But whether all foreign incomes are taxable? No. All foreign incomes are not taxable. Only those foreign incomes which arise because of business controlled from or profession set up in India are taxable. In case of non-resident, only Indian income is taxable. Only Indian income is taxable. That means what? Foreign income is not taxable for non-resident. I told Glenn Maxwell came to India. He played in India in IPL. He earned money in India. Glenn Maxwell, basically he is non-resident. Okay, so whatever the income earned from matches in India is there, on such income Glenn Maxwell is required to pay tax in India. He earned income in Australia. Why the hell that income will be taxed in India? In case of non-resident, only Indian income is taxable. Foreign income is not taxable. Are you able to understand? So please look at me, everybody. Indian income. Indian income is taxable for all, irrespective of the residential status. Indian income is taxable for ROR, RNOR as well as for non-resident. But foreign incomes are not taxable for all. All foreign incomes are taxable for ROR. In case of RNOR, all foreign incomes are not taxable. Only those foreign incomes from business controlled or profession set up in India are taxable. In case of non-resident, foreign incomes are not at all taxable. So thumb rule, Indian income blindly tax it for all, ROR, RNOR or non-resident. But if income is foreign income, hold on, careful, cautious. If the residential status is ROR, tax total foreign incomes. If the residential status is RNOR, tax only those incomes from business controlled or profession set up in India. If residential status is non-resident, don't tax foreign incomes. Are you able to understand? Now, your major doubt I am going to explain now. Your doubt is, sir, what do you mean by foreign income from business controlled or profession set up in India? Shall I explain? There is an individual with the name Saravanan. There is an individual with the name Saravanan. He stays in Chennai, Tamil Nadu. Now, he opened Sarvana Bhavan in New York, USA. Sarvana Bhavan in New York, USA. Sarvanan resides in Chennai. He resides in Chennai. But where he started his hotel? He started his hotel in New York. Correct. Now, this hotel, where operations of hotel are going on, where food is prepared and food is sold, where tiffins are prepared and tiffins are sold, operations are going on in New York. Am I correct or not? Those who are coming to hotel, where they are paying money, they are also paying money in the hotel that is there in New York. That means like place of accrual, the place where operations are going on, that is New York. Place of receipt of income, income received in counter of hotel. Correct. See, there will be in that hotel there will be counter, right? Cashier will be there. Cashier collected income. Where cashier collected the income? In the hotel situated in New York. That means place of receipt is also New York. That means place of accrual outside India, place of receipt is also outside India. Can we call income from Sarvana Bhavan Hotel as foreign income or not? Tell me. Can we call income from Sarvana Bhavan Hotel as foreign income? Yes, because place of accrual is outside India, place of receipt is also outside India. So this we call as foreign income. Well and good. But how that foreign income was earned? Who is controlling Sarvana Bhavan Hotel? Sarvana Bhavan Hotel is controlled by Sarvanan. Where Sarvanan is located? Whether Sarvanan is sitting in New York? No. Sarvanan sitting in Chennai controlling New York branch operations. Am I correct or not? That means what? The place where decisions are taken, it is not USA. The place where decisions are taken is in Chennai, India. That means what? Sitting in Chennai in India, he is taking all the decisions relating to New York hotel, in relating to Sarvana Bhavan Hotel in New York. So, income earned is foreign income only. But to earn that income, how business operations are controlled? Business operations are controlled from Chennai, India. So here we can tell whatever this foreign income is there, this foreign income is from business controlled from India. Are you able to understand? So this type of foreign income is taxable for RNOR. Are you able to understand? Remaining foreign incomes are not taxable. Only this type of foreign income is taxable for RNOR. I hope you got clarity. So what do you mean by this? If any income is received and accrued outside India, we call it as foreign income. But if that foreign income is received because of the business situated in outside India is controlled from India, or because of the profession set up in India, then such type of foreign income is taxable for RNOR. Are you able to understand? With this example, I hope you got the clarity about what foreign income from business controlled or profession set up in India means. Did you get the clarity? Shall I go ahead? So Indian incomes taxable for all, ROR, RNOR, non-resident. Foreign incomes, all foreign incomes are taxable for ROR. All foreign incomes are not taxable for RNOR. In case of RNOR, only those foreign incomes from business controlled or profession set up in India are taxable. In case of non-resident, only Indian income is taxable, foreign income is not taxable. So did you get the clarity? Shall I go ahead? Next point is, sir, you are quite often saying residential status, residential status, residential status. What does residential status means? Residential status means determining whether a person is ROR, RNOR or non-resident. So determination of a person as either ROR, RNOR or non-resident, such process we call as determination of residential status. That means classifying whether a person is ROR, RNOR or non-resident. Such classification we call as determination of residential status. Now you will get another doubt. Sir, why you need to classify residential status? Why you need to determine residential status? Because I will tell the reason why we need to determine residential status. Look here. So see what government ultimately wants from citizens. Government ultimately wants tax. How to calculate tax? To calculate tax, what we need? We need total income, correct? For calculation of tax, we need total income. For calculation of total income, we need to know whether a person is ROR, RNOR or non-resident. Am I correct or not? See, there is one individual with the name Mr. Raju. I asked you to calculate total income of Mr. Raju. Then you will ask me, sir, what is the residential status of Raju? Why residential status is needed? Because if you do not know the residential status, you cannot calculate total income of Raju. If you know Raju is resident and ordinarily resident, then when you are calculating total income of Raju, you will consider Indian incomes as well as foreign incomes. If you know Raju residential status is RNOR, when you are calculating total income of Raju, you will consider Indian income. You will also consider foreign income from business controlled or profession set up in India. Next, when you know Raju is non-resident, when you are calculating total income of Raju, you will only take Indian incomes, you will ignore foreign incomes. That means to calculate total income, we need to know residential status. Without knowing residential status, you cannot calculate total income of a person. That's why first step in calculation of tax liability is determination of residential status. Unless and until you determine residential status, you cannot calculate total income of a person. Are you able to understand? So, like to calculate tax liability, you need calculation of total income. For calculation of total income, you need to determine residential status. Unless and until you determine residential status, you cannot calculate total income of a person. That is the basis. That is the reason we are determining residential status. Okay. I hope now you got clarity why we need to determine residential status. Shall I go ahead? Okay. Next, basic points. Residential status is different from citizenship. Residential status is different from citizenship. Shall I explain this point? Basically, citizenship is determined based on place of birth. Based on the place where an individual is born, citizenship is determined. An individual born in India, he will be called as Indian citizen. He is born in Australia, he will be called as an Australian citizen. An individual born in America, he will be called as an US citizen. That means based on place of birth, citizenship is going to be determined. Many people quite often get confused and they will think residential status and citizenship both are same, but their contention is not correct. Residential status is different, citizenship is different. Citizenship is determined based on place of birth, residential status is determined based on number of days an individual stays in India. Are you able to understand? That means based on physical presence in India, based on number of days an individual stays in India, we are going to determine residential status. For example, individual stayed in India for 182 days, then individual becomes resident in India. That means how we are telling individual is resident in India based on number of days he is staying in India. If he stays in India for more than 182 days, we can tell he is resident in India. So that's what, based on physical presence, based on number of days an individual stays in India, we are going to determine residential status. Whereas citizenship will be determined based on place of birth. Are you able to understand? Now, when I am saying this, one student asked me a question, sir, a baby was born in flying from Africa to India. Now, will he be called as African citizen or Indian citizen? Tell the answer. Will he be called as an African citizen or Indian citizen? See, just because he is born in flight, birth certificate will not be given. Parents should apply for birth certificate. Am I correct or not? So, in which country they apply for, birth certificate is there, in that country he is going to get the citizenship. Are you able to understand? Okay. So I hope you understood the first basic point. Shall I go for second one? Yes. Residential status changes from one country to another country. What do you mean by this? In India, we are determining residential status as per Income Tax Act 1961. My dear students, Income Tax Act 1961 is applicable only in India. When you go to foreign countries, Income Tax Act 1961 is not applicable. When you go to foreign countries, that particular Income Tax Act is applicable. Am I correct or not? If you go to like Saudi Arabia, Saudi Arabia Income Tax Act is applicable in Saudi Arabia. If you go to Canada, Canadian Income Tax Act is applicable in Canada. If you go to Japan, Japan's Income Tax Act is applicable in Japan. So in every country, as per the Income Tax Act that is applicable in respective country, we are going to determine residential status. In India, we are determining residential status as per Income Tax Act 1961 applicable in India. When you go to Africa, you are going to determine residential status as per Income Tax Act applicable in Africa. That means what? Whatever the income tax law is there, it is not applicable globally. It is not applicable worldwide. Every country has its own income tax law. As per that country's income tax law, you are going to determine residential status in that particular country. So, an individual who is resident in India, as per Income Tax Act 1961, may become non-resident in USA. Similarly, an individual who is non-resident in India may become resident in Canada. So, what I want to conclude is, if you determine residential status in India, the same residential status will not apply worldwide. If you go to another country, your residential status may change, because in another country that particular country income tax law is applicable. Are you able to understand? So residential status changes from one country to another country. Next, third basic point. Residential status changes from one previous year to another previous year. Residential status changes from one previous year to another previous year. What do you mean by this? In previous year 24-25, individuals stayed for 365 days in India. But on 1st April 2025, he went to USA, never came back. Never came back. That means in previous year 25-26, he stayed in India for only one day. Do you agree with me? Only on 1st April he stayed in India. From 2nd April onwards he stayed in USA. That means in 24-25 he resided in India for more than 182 days. So he becomes resident in India. In 25-26 he stayed only for one day, which is less than 182 days. So he becomes non-resident. That means what? Whatever the residential status that you are determining for one previous year is there, same residential status will not apply lifelong. This residential status is subject to change from one previous year to another previous year. What I said, residential status is determined based on number of days an individual stays in India. Am I correct or not? That means based on physical presence we are going to determine residential status. Every year he will not stay in India for same number of days, right? Sometimes he goes outside India, again he comes to India, again he goes to outside India. So number of days of stay in India is subject to change from one previous year to another previous year. So for every year separately you need to determine residential status. If an individual is resident in one previous year, there is no guarantee he becomes resident also in the next previous year. It is subject to change based on physical presence in India in the next financial year. Are you able to understand? So once you determine residential status, it is not applicable for lifetime. It is applicable only for that particular previous year. For next previous year, again you need to determine residential status from the beginning. So residential status is not constant for lifetime. Residential status is subject to change from one previous year to another previous year. I hope you got clarity till here. Shall I move ahead? In basic concept chapter, we have discussed person includes individual, HUF, partnership form, LLP, company, domestic company and foreign company, AOP, BOI, local authority, artificial juridical person. So person includes these 7 category of persons. Am I correct? But for determining residential status, that means to determine whether a person is ROR, RNOR or non-resident, person is classified into 4 categories. Category 1, individual. Category 2, HUF. Category 3, company. Category 4, other persons. Other persons. Under category 1 individual, there are 3 residential statuses: ROR, RNOR and non-resident. Under category 2 HUF, also there are 3 residential statuses: ROR, RNOR and non-resident. For company, there are only 2 residential statuses. Company can either become resident or non-resident. Other persons also, they can either become resident or non-resident. That means what? Individual, HUF. These 2 persons are having 3 residential statuses. Either they can become ROR or they can become RNOR or they can become non-resident. Company, other category of persons, they have only two residential statuses. Either they can become resident or they can become non-resident. Are you able to understand? So to determine residential status, person is classified into four categories: individual, HUF, company, other category of persons. Individual and HUF is having three residential statuses. Company and other category of persons are having two residential statuses. Next. So that much remaining we will see in the second lecture.